Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday, the 9th of March 2024. We're publishing our gold and silver weekly update for the week ending the 8th of March. Last week we saw a breakout for gold and silver to the upside. What happened and why did this occur? Let's take a look. Now, before we look at the figures, just a quick reminder, we've set up a second channel entitled Finances Do Matter, covering a whole array of financial topics. Now, we've placed a link in the description box and comment section below for those who have not as yet joined that channel. Well, we've seen the breakout at last. Gold rose $96 last week, rising from $2,083 to $2,179. Having hit a high of $2,195, so just shy of that $2,200 level, and a low of $2,079, a rise of 4.6%. Now, in our last update, we predicted that gold would normally trade between 2025 and 2125, with 2000 and 2150 as outliers. Well, we were right up until Thursday, and then gold took off. We did say last weekend that we could indeed see gold continue its rise early into next week to be either supported or checked by the ADP and non-farm payroll figures. As we will discuss shortly, the job figures were good for February, but January and December were downgraded heavily, thereby boosting gold even further. Now, gold spread between high and low was $116. And just as a reminder, if we compare that with the previous week, it was only $64, and the week before that, $28. So this past week has showed a significant move in the price of gold and fluctuation between its high and low, though, quite frankly, the low was only a couple dollars lower than its opening price. In sterling terms, gold finished the week at £1,695, that's up £47, and it was up €71 at €1,993. Now, in percentage terms, silver exceeded gold's rise, perhaps catching up a little from the week before. Now, silver rose $1.21, rising from $23.13 to $24.34, having hit a high of $25.25 and a low of $23.04, a rise of 5.2%, and that compares with gold's rise of 4.6%. Last weekend, we forecast that silver would move between $22 and $24, with $21.50 and $24.50 as outliers. Well, apart from a brief spell on Friday, silver traded and then closed within our outlier range. The difference between its high and low was $2.20. That compares with $1.07 the week before and just 95 cents the week before that. So the range was twice the recent normal range. In sterling terms, silver closed at £18.95, that's up 63 pence, and in euros it was up 0.86 euros at 22.26 euros. As a result, the gold to silver ratio fell slightly from 90 to 1 to 89.5 to 1. Now, Bitcoin is currently standing at $68,480, and we are expecting it to rise further. It's up $6,280 on the week, and that's following the previous week's rise of $10,700. And during the week, Bitcoin has surpassed its all-time high, and will continue to do so until the halving occurs in a few weeks' time. Equities were marginally lower this past week. The Dow Jones closed down 365 points at 38,722. The S&P closed down 14 at 5,123. The Nasdaq was down 189 at 16,085. And the FTSE was down 23 points at 7,659. No need to be alarmed. These are relatively small declines. And when one compares that to the recent all-time highs hit by many of these indices, it is just a temporary period of consolidation. Oils were slightly lower. Brent crude down $1.47 at 82.08, and WTI crude down $1.96 at 78.01. The dollar index stands at 102.71. That's down 1.15 points on the week. Now, we said last week, watch out for the jobs report on Friday. And frankly, this was a game changer, at least very short term. We pointed out that inflation was not as good as analysts had interpreted, but traders were determined to push precious metals higher and were looking for every and any opportunity to do so. A fall in the dollar value also assisted this effort. As far as economic data was concerned, most reports were in line with expectations. Things like factory orders, services PMIs, and the ADP employment report, though it was slightly lower by 10,000 new jobs. But the non-farm payrolls, being heavily amended downwards for January and last December, coupled with an increase in the unemployment rate from 3.7% to 3.9%, boosted precious metals, even though the February figures were higher than expectations by 77,000 new jobs. Hourly wages at 0.1% increase for Feb is lower than the 0.2% increase expected and the 0.5% increase experienced in January. So precious metals were truly lit up. Now, this coming week, we have CPI figures on Tuesday. And this represents the CPI figures for February. And any deviance from 0.4% for CPI or 0.3% for core CPI will move markets in either direction. It is hoped that the core rate year over year will fall from 3.9% to 3.7%. And if that fall is greater, then we will see even higher gold and silver prices. On Thursday, we have retail sales, and a strong performance is factored in for February, 0.7% compared with minus 0.8% the month before. We also have PPI figures on Thursday to watch out for too. Now, there are three main reasons we saw gold move last week. Federal Reserve rate cut speculation bolstering gold's upward price trend. That's simply because the jobs report to some degree indicates this. Central banks' robust gold buying underpinning markets' bullish outlook. And Treasury yield decline and weaker dollar significantly strengthening gold's appeal. Now, analysts are now convinced by the argument put forward by James Hyschik of FX Empire, who said, quote, Friday's US labor market data showed an uptick in unemployment and moderated wage gains against strong jobs growth, reinforcing the expectation of a Fed rate cut around June. This anticipation positively influenced the gold market, suggesting strong potential for continued price increases. He also pointed out, quote, the upcoming consumer price index, CPI, and producer price index, PPI, reports could significantly impact gold prices. Higher than expected CPI and PPI readings may suggest persistent inflation, potentially causing the Federal Reserve to hesitate on rate cuts. This scenario could lead to a consolidation in gold prices as investors reassess the likelihood of continued monetary easing. Conversely, lower than anticipated inflation figures could reinforce the expectation of rate cuts, further boosting gold's appeal as a safe haven asset. Unquote. Now, gold hit record highs last week, and there's also a narrative that perhaps a pullback may be coming, especially as gold has risen for 8 consecutive days in a row. So we have one narrative suggesting a breakout to the upside, and a number that a retracement is on the cards. Now, there is a danger, in our view, that gold may be getting ahead of its skis very short term, but we have no doubt that gold will have higher to go during the course of the year. Now, analysts at GSC Commodity Intelligence are calling the beginning of a new era for the precious metal. In recent days, an influential list of Wall Street banks raised their price forecasts, calling a probability of gold averaging around a record $2,300 an ounce in the second half of 2024. We share that view, if not slightly sooner, while the most bullish predictions came from Citi, reiterating their view for prices to top $3,000 an ounce over the next 12 to 16 months. Well, we hear you ask, what about silver? Well, in a nutshell, silver is following the track of gold. So far, it's underperformed in relation to its big brother or distant cousin, depending how you wish to call gold's relationship to silver. But that is because we are not yet witnessing super strong industrial demand, and one does not have central banks buying up silver like they are with gold. That said, silver has now reached its highest level since December 23, but still has another $4 to go before reaching its 3-year high, which was achieved in May 2021. So what are we forecasting for this coming week? Well, if the bullish narrative continues into next week and is supported by promising CPI data, then we can expect to see gold trade between $2,150 and $2,250. If the data is disappointing, we may see gold fall back to $21.25 and possibly slightly lower. So our range forecast for this coming week is $2,125 to $2,250, with an outlier possibility of $2,100 to $2,275. For silver, we envisage trading between $23.25 and $25.25, with $23 to $26 as outliers. What do you think? Please do share your thoughts. Meanwhile, we'd appreciate it if you would give this video a thumbs up, subscribe, press the bell sign, pop on over to Finances Do Matter, sign up there please. That membership is growing quite significantly, and we'd appreciate that you don't miss out on that. And as a result, as always, we wish you a safe, enjoyable weekend and a prosperous week ahead.